Good morning and welcome. You're watching the Small and Mid Cap Show on NDTV Profit. I'm Hersh Sayta. Quick check where markets are at. You're looking at around a 0.5% cut on the Nifty. The way we started off, honestly, we'll take this one is what I believe. Quickly looking at what is really causing the declines as well as the advanced decline ratio itself now. Largely, we are seeing that some bit of green starting to creep in with regard to where the advanced decline is. There you go, 2:1 currently, where the NSE advanced decline ratio currently stands at in favor of the declines. You're seeing largely the drag coming in or continuing to come in from HDFC Bank, contributed nearly 200 plus points yesterday, negative points, contributing another 66. So adding to some of those declines, HDFC Bank today as well, you're down around 2% odd. You also have a drag coming in from LTI Mindtree, which is contributing roughly 14 negative points, down 10+%. That's the largest decline that we've seen from an LTI Mindtree since 2020. So the COVID decline was probably the largest decline. After this, we haven't seen much of this kind of a decline with regard to LTI Mindtree. Asian Paints also down roughly 3% odd. So therefore, largely what it seems to be is it's a market which is more earnings focused. In terms of where the broader market as well as the sectoral indices are doing, the broader markets largely trading in tandem with the Nifty 50, around 0.6% of a decline on the Nifty mid cap. The small cap index also roughly you're seeing a decline of around 0.25% on the Nifty small cap as well. In terms of where sectoral indices are, you're seeing most sectoral indices in the red. Nifty PSU Bank has just crept up in the green as we speak. Oil and gas also up a wee bit in the green, but other than that, absolutely flat even where the Nifty PSU Bank is concerned. So that's where we are at, where markets are concerned. But we have we have quite a few very interesting managements lined up on this show, which is a small and mid cap show. We always focus on those managements, and we have PSP projects, which is in focus. The company has emerged as the L1 bidder for a project, for an RVNL project, which is in Gujarat. It's also won 4 other projects in Q3 all the way up to now. And as we spill over into Q4, around 1,450 odd crore of projects won. And it's expecting to expand its footprint from Gujarat into other states. It's targeting an annual revenue growth of roughly 15 to 20%. And we have with us Prahala, Shivram Patel, who's the CMD at PSP Projects, who's here to talk to us about what's happening. Sir, talk to us about, in particular, this order win as well as the 1,450 odd crores of additional orders that you've won. Give us some color with regard to orders, the pipeline, as well as also if you can tell us how margins will look with some of these incremental orders that have come in.
Good morning. First of all, talking about the order which we have won of RVNL, it is a Gati Shakti University related to railways, and this will be developed in Baroda. And this project is about 630 crore is the price for which we have won this project, excluding GST. And this is to be completed in 24 months. Most of the buildings has to be completed within 15 to 18 months, and rest of the total project to be completed in 24 months. Talking about the other projects where we have stood lowest, Daroi Dam, which is a development of Daroi Dam, which is a tourist place, and it is being project by state government of Gujarat. There is one project in Science City which we have stood lowest. There is one project of riverfront development of Sabarmati River, which is about 450 crore. So talking about the L1, it is about 1853 crore, and talking about the project which we already received the orders is about 1063 crore. So totally, if we see the project which we have, NBCs or the project which we were expecting the inflow for this year which we announced was 3,000 crore. We have already reached to 2,913 crore till date. So that's about the project. And about the bid pipeline, still we see a lot of bids are going on in the process. So we as a company is also having about 8,500 crores of order bid pipeline, out of which there are few large projects which I would like to discuss is the railway station development of Delhi, which is about 4,700 crore. There is a new airport, expansion of new airport at Varanasi, which is about 1,000 crore. There is one museum in Indore, in MP, Omkareshwar, which is about 1,000 crore. We have already bid one tender for Amul Dairy, National Dairy Development Board in Rajkot, which is about 400 crore. There is a project also for IM, expansion of IM in Indore, which is around 450 crore. So totaling, it's about more than 8,000 crores of bid pipeline. So the outlook looks good for building construction companies like us, because we are mostly focused on large projects of medical or large projects of education or large projects related to airports in the railway stations, which are the prime objects of government investment as of now.
Sure. Sure. So, point taken, sir. I want to try and understand from you before I come to margins as to out of this 8,500 odd thousand crore, how many or what's your internal target like? What are you looking to win in terms of orders?
So usually on an average throughout the year, the bid pipeline remains between pre-COVID or maybe after COVID, it was in the range of 5,000 crore. But since last 1.5 years, we are seeing this bid pipeline in the range of 8,500 crore. And on an average, we usually win between 10 to 12%. So still this 8,400 crore, as we have already reached to 3,000 crore, we will be moving little bit cautiously from here. Because at the end of the day, growing a big book is not my concern. It is more about how we deliver the project, how we maintain our EBITDA level, and how we perform on the project. That's the major focus on which companies and targeting.
Sure, understood. And therefore, would there be a larger thrust on winning projects with higher margins? And what would the nature of those projects be like?
See, as I said, the government spending is more on infrastructures of railways, infrastructures related to airports, infrastructure related to medicals, because all the government has already announced district-wise medical college and hospital. We are already doing 7 medical colleges and hospitals in UP. So there will be the main focus of the company will be in the same criteria where we have perform. At the same time, those things will help us into pre-qualify for such large project. After completion of Surat Diamond Boost, we have reached to that level that we can qualify up to 3,000 crore project. So it will be in the same range and the same field where we have been able to perform well.
Understood. Understood. And your expected growth kind of roadmap is around 15 to 20% year over year. My guess is you'll get to 2,400 crore and then closer to 3,000 crore by FY25. Is that how one should look at it with a 12% odd margin? Is that the right way to look at PSP?
Yeah, of course, there is the criteria on which we usually bid, that trying to maintain our EBITDA level between 11 and 12 or 11 and 13. And overall keeping the revenue growth of 15 to 20%. At the same time, keeping the overall order win of more than 25% from the last year's revenue. That's how we have been doing last 4 or 5 years, and that's how we have been able to perform. So it still try to remain in the same range.
Sure, understood. And you have roughly 250 crore of cash in your books is what I am seeing at the end of Q2. Please correct me if I'm wrong. And therefore, you have another 500 crore of cash coming over the next couple of years at the very least. What are the capex plans like, and what do you plan to do with this money?
So usually capex in construction or a building construction companies like us, it's not something we plan at the start of the year. It is more about the requirement of the project. So as and when the projects are won, and then the requirement of the project is some specific requirement of shuttering or some major machineries like tower crane or RMC plant. But usually whatever we have, we usually move first from the existing plant and machinery. But on an average, we have gone through about 3 to 4% of our capex expenditure every year. So it will be in the same range that we should be in the range of keeping 3 to 4% of capex doing every year, depending on the revenue and depending on the orders.
Sure, understood. And what are the risks from a raw material standpoint? Are these largely hedged within the contracts you take? So are you building the contracts for, or are you building escalation clauses within the contract with regard to some of the projects that you're taking up?
So usually private projects where we are doing our order book ranges between 30 to 40% on the private and 60 to 70% on government. But yes, private projects are 100% edge for the escalation part of cement, steel, and other finishing materials. But as far as government project, most of the projects carry a escalation through RBI index, which may give you about 75 to 80% of what you are spending. So more or less it is covered through RBI index, and the escalation formula is related to indexes of the Reserve Bank of India.
Understood. And out of the current order book, what component of that is government versus private? If you can just break that up for us.
Before receiving till the order book, the orders which we have announced and the orders which we have received, still we range between 40% as private and 60% as government.
Sure, understood. Thank you so much for this. It's been a pleasure speaking with you. And Mr. Prahlad, I look forward to speaking with you one more time very, very soon. But wishing you all the very best for the upcoming results as well. Well, that was, of course, the management of PSP projects. The stock is largely flat in a tough day of trade. In fact, it's recovered from the day's low. But with that, let's slip into a very short break. Up next, the management of Som Distilleries on the back of numbers as well as the fundraise. And we have the management of Nazara Tech as well. So stay tuned. We have a packed lineup for you on the SMID Show. Welcome back. You're watching the small and mid-cap show here on NDTV Profit. I want to quickly flag off Som Distilleries because we have the management lined up right after this for you. You have the stock up and away, 3.5% higher. Strong revenue growth seen, 64% higher on a year-on-year basis. EBITDA also up nearly 87% on a year-on-year basis. You're seeing margins which have expanded by around 50 bips or thereabouts to the 11.95, now kissing distance to 12% mark, and your net profit is up a solid 71%. 18 crore is the kind of net profit they've clocked. This company is into, of course, distilleries, but is largely guided for a very strong growth when it comes to its business. They are looking at quickly ramping up its business, and the top line, which is roughly at an annualized run rate of around 11 to 1200 crore, is expected to go up significantly to the 10,000 crore mark by FY28 or thereabouts. So, of course, we will have we do have the management, which is the CMD of Som Distilleries, Mr. J.K. Arora, joining us with regard to also its fundraise as well as the IT department search, and we'll try and cover all those bases. Lots of bases to cover in a very short period of time. Welcome to NDTV Profit, sir. It's a pleasure having you here.
Hi.
Right, sir. So, your margins have expanded by roughly 50 bips. It's a good expansion when I'm looking at it. What are the factors or what are the levers that are helping you expand margins, and where do they go from here?
You see, the ultimate thing is the consumer. When consumer accepts you, everybody accepts you with the open arms. So in our case, the consumer is the God for us, and it is the acceptance of the brand which has given such a fantastic growth. In fact, since the inception of the company, 94-95, we didn't had such growth from since beginning. So this is quite a satisfactory performance for us, and we are quite happy with especially when this quarter is normally weak because of the Shraddh, Ganesh, and all that. So this quarter is generally weak, but this time this has been extraordinary, and we are happy with the performance.
Understood. And sir, largely what we are seeing is a 12% odd margin. So do you therefore believe that from here you're going to go higher? Is there scope to expand this further, or 12% is where you're happy with?
No, margins are actually, if you look to the industry norms, we are doing slightly better than the industry norms. So as far as margins are concerned, I don't think because of the pressure on the raw material and packing material, I don't think. But important is market share, and important is turnover. The market share has been increasing, and the growth against the normal growth of the 8 to 9% of the industry, our growth for this quarter is about 77%. Which is phenomenal. This thing in first quarter is the normally April, May, June is the seasonal, where the highest growth is there, but we had the 51-52% growth. Same was in the second quarter, but this quarter is about 77%, and profit before tax is more than 100%. So margins, but market share and the turnover will have the same pace for the at least minimum 3-4 years, 5 years in the coming time.
Sure, understood. And let me try and understand how trends are playing out in the industry as a whole while you're speaking about that piece. So premiumization seems to be a trend which is playing out in your space. How are you trying to tap into it? What are the plans here for Som?
You see, now the actually trend is different. When we were in the college, so we used to look into the beer for which is a 1 rupee, 2 rupees is cheaper. But now the young generation has got a lot of disposable income with them, and they don't mind trying the new brands with the premium brands and paying 30, 40 rupees bottle extra. They don't mind, but they want to have it something new, something fun, something different. So having this trend in view, we are introducing a fantastic beer called Woodpecker beer in the state of Karnataka, which is a higher than the Budweiser beer, which is the leader in the market. Our beer is going to be a 10 rupees bottle expensive than the Budweiser beer because of its extraordinary packaging. First time in India, we are introducing the twist cap. This normally you have seen either you open it with the opener or you open it with the ring pull cap. But this is the first time when you can, open it like this thing, twist cap. First time we are introducing, and it's a very, very premium packaging. And we had already launched a 5-liter party keg in the state of Karnataka, which has been accepted beautifully in the state, doing pretty well. So now in next month we are launching this Woodpecker premium beer, which is the also first filtered wheat beer as well. So with lot of USPs, we are coming with the premium beer market, and we are entering into the top layer of the business.
Understood. You've guided for a revenue of 10,000 crore by 2028. Talk to us about the journey for that. That's point number one. And quickly, I just need to cover the other base as well. With regard to the IT search, anything that's come out of the search that you feel or which has been communicated to Som?
No, we have got all the notices, and which doesn't say anything much about the this thing. As regards our day-to-day things, we do not believe in any kind of hanky-panky business, and our businesses is quite a straight line business. So till date, whatever notices, almost all the notices have come, which doesn't say anything damaging in a big way, nothing. So we are quite confident that nothing will affect the company as far as notices are concerned. A few explanations they have asked, which we are comfortably replying. So we are not, as far as income tax search is, nothing for us. Few crores maybe in the tax here and there will go. That is a routine thing. So as it is, we are paying, this year we are paying 40% more taxes than the previous year. Sure. So taxes as it is, I believe if you have to really grow in the business, then you have to grow by paying the taxes only. By paying, if you pay more taxes, you are growing. You are doing more good to you than the nation. Right. So, especially when you are a listed company, the tax payment is quite this thing. Right. I should tell you this thing. We are.
So we take your point.
Yes.
We completely take your point. So no concerns from a tax perspective. But sir, apologies. We're going to have to cut this short. Thank you so much for speaking with us. We will, of course, have a larger conversation with how you take your revenue to 10,000 crore. I'm looking forward to having you one more time on our small and mid cap show. But I'm sorry, we're going to have to let you go. Thank you so much. We have the management of Nazara Tech. They've raised 200, or they are looking to raise 250 crore rupees via QIP. 872 is the price that they've kept the QIP for. We have Nitish Mittersen, who's the CEO, founder, as well as joint MD at Nazara Technologies. Welcome to NDTV Profit, sir. Nitish, talk to us the objective of the fundraise. Of course, you're still in acquisition mode. Fully understand that. But talk to us about where these funds are going to get deployed directly.
Sure. Just to clarify, it's a preferential issue and not a QIP.
Oh, right. Sorry.
So we had announced earlier in the year that we are planning to raise up to INR 750 crores, of which in September we had placed 510 crores to Nikhil Kamath and to SBI Mutual Fund. And now we've concluded this planned fundraise by placing another 250 crores. The good news is that we've, got the subscription from our existing marquee investors, including again Nikhil Kamath, ICICI Prudential Mutual Fund, and Fruit as well. So I think that gives us a lot of confidence that our investors are really backing our strategy, and we are very excited about it. Cumulatively, now the company has a consolidated cash balance of 1,500 crores. We are a profitable cash flow generating company, and therefore much of the capital will get deployed in new investments and acquisitions. Nazara, as you know, has been pretty acquisitive in the past as well, quite successful. And we see many opportunities in the gaming space in India as well as globally, where we can acquire businesses and scale them. So that's completely our plan as we move into FY25.
Understood. But, when I'm looking at your cash balances, you have a decent cash balance as well. You have a war chest, roughly 500 odd crore. Please correct me if I'm wrong. So is there some big acquisition planned? Is that why this fundraise becomes important for you? I don't see much debt, so that should not be a concern.
So at the Nazara parent level, we have, including this new fundraise, we will have a little bit over 1,000 crores of cash. In our subsidiaries, we have another additional 500 crores of cash. This puts us in a very strong position because today gaming companies globally are available at good values for us, and we do know how we can actually acquire these businesses and scale them significantly and profitably. So I think we can really use the power of the cash we are sitting on to uplift our own business through these acquisitions. And that's why we have gone and raised this cash. We have a strong deal pipeline. My team has worked pretty actively over the last year to create a healthy pipeline. And now we're doing our diligence to make sure that the bets we take pay off for us and our shareholders.
Right. Any specific geographies, products that you're targeting now to add to your suite?
So for us, India remains a core strategic market, and the US is also an important market for us. So I think we will either do India-focused acquisitions or, businesses that are focusing on US as a market. We are looking at many game studios which have their own gaming IPs, the esports space and the adtech space to play in.
Sure. I get your point. Unfortunately, we're totally out of time, Mr. Mitasen, so I'll have to wrap this conversation here, but it's been a pleasure speaking, understanding with regard to the larger, broader fundraise strategy, what's happening, as well as with the cash balances, what is happening. Thank you so much for this quick chat, but with that, we're completely out of time on this edition of the Small and Mid Cap Show. Thanks so much for watching. Stay tuned to NDTV Profit. More on the other side, of course.